I would be showing you some of the things you have been doing wrongly with smart money concepts. I started trading smart money concepts. I started trading a while ago, and my first exposure to smart money concepts was in 2021. That's about 5 years ago. At that time, it was the buzzword of the market. It was called the Holy Grail. Everybody wanted to learn smart money concepts because they felt that once you understand smart money concepts, all your trading problems are solved. I spent a lot of time, hours, videos understanding the concept, but when I started putting it into practice, I noticed some contradictions, right? And as I began to learn more about trading, I was able to identify those areas where I was getting it wrong. And in this video, I want to show you what some of those things are and how you can get it rightly. So before we proceed, let me just give you the layman understanding of what smart money concepts is all about. So in smart money concepts, you are told that, for example, if price is moving this way, take for example, price is moving this way, right? Simply, you are made to understand that you watch out for those regions where there are possible clusters in the market. So let's say, for example, something like this, right? This region, for example, a lot of retail traders are trying to buy in this region. Support and resistance guys, they are buying here because they consider this as a support. Supply and demand guys, they are also buying here because they consider this as a demand zone. I mean, this is a good demand because it led to a break of structure. That's what they will tell you. They consider this as a demand zone. Not just that alone, even trend line traders, for example, right? Trend line traders, they will tell you, oh, this thing touched, the 3 touch or whatever touch, that they mentioned, and all of that. They will tell you that, oh, this is a good area. Let's also consider that as a buy zone. So whenever you see these kind of clusters of buyers in this buy scenario, right? You see these clusters of buyer in this region, smart money concepts will tell you that what happens is that they come here, right? When they get to this zone, knowing that a lot of people are trying to buy here, what happens is there is an inducement of a sort that makes people who are buying to think that, oh, price is now selling, price is no longer buying. Now those guys, they start selling themselves, and suddenly price moves like this, right? So that's what you are told. So in simple terms, what happens is the region where buys are expected, for example, it's also applicable for a sell, is first of all used as an inducement, a grab of liquidity. Inducement means to fake something, right? So a grab of liquidity, and when that grab of liquidity happens, to make people feel like, oh, this buy is no longer holding, suddenly the buy now holds. So in simple terms, right, smart money concept is divided into just 3 things. Basically, this is summary of smart money concept, and these are the 3 things. The first is the grab of liquidity. After there is a grab of liquidity, there is a break of structure, then there is a return to order block, right? So let me explain what that will look like. So in this case scenario, what you have will be something like this. You have something like this. Price comes down here. Instead of price to buy in this zone, there is a grab of liquidity, and then they tell you to wait for something like a break of structure that gives a confirmation for the buy, right? And then after that break of structure, it returns to this other block, and suddenly the buy happens. So these 3 things are what the average smart money concept trader is looking for. They are looking for a break of they are looking for a grab of liquidity, they are looking for a break of structure, and then they are looking for return to this other block here, right? Price returning to this other block, and then the buy happens. It's simple. It is, or it looks so, until you start applying it, and then you realize that this is not really as simple as a lot of people we assume it to be. Now let me show you something that serves as a contradiction, one of the contradictions that I experienced while trading smart money concepts, and I want to believe that somebody who is watching this video might have also experienced it. So look at this, for example. You are seeing something like this, right? Price is doing this movement, so just follow me on this movement, and then price is doing this. So the challenge now is, should we be expecting a buy or a sell in this kind of scenario? Because if we are going to be going by liquidity grab, break of structure, and return to order block, this is a liquidity grab, right? This is a liquidity grab. This is a break of structure. And going by smart money concept, if this is a liquidity grab and a break of structure, then this should be price returning to this other block, and what you would be expecting here is a buy from smart money concept. In the same vein, from smart money concept, we can also realize that actually this can also be considered as a liquidity grab. This can be considered as a break of structure. And what happens, right? What happens is that you should be expecting, right, return to order block in this region, price returns to the other block, and then there is a sell. So it is a contradiction. In the same case scenario, there is a possibility of a buy. In the same scenario, there is a possibility of a sell. This was one of the things that really got me confused with smart money concept, and I started researching, studying, until I figured out the way it works, until I figured out what really works. And this is one thing I have come to realize, that a lot of people understand it, like I mentioned earlier, in theory, but the problem is not the theoretical understanding. The problem is understanding it in principle, which is the application. And this will now lead me to one thing I have come to realize that a lot of people are doing wrongly with smart money concepts, and it is this: they do not yet understand this, the inducement that they are trading away from. If you can't clearly identify the inducement you are trading away from, if you can't, so I call it inducement I'm trading away from, because I don't trade smart money concepts, I trade liquidity circle, right? So I tell my students that the most important thing before you even begin trading is to ask yourself, what is the inducement that I am trading away from? Are we together? Now, in smart money concept, it is called liquidity grab. So the problem many of the time is that people cannot identify the liquidity grab. They do not know how to, the correct liquidity grab. Let me put it that way. There is a right way to identify liquidity grab. There is a right way to identify the inducement you are trading away from, because everything makes sense once you have been able to identify the inducement you are trading away from. If you don't identify it correctly, that's your break of structure is false. How many of you would have realized it? You saw a liquidity grab, you saw a break of structure, and then you placed your orders, you expected price to return back to that zone, and then you were expecting a buy, only for you to be cleared out, and you are wondering, what am I doing wrongly? What you are doing wrongly is you are not identifying the right liquidity grab, the right inducement you are trading away from. Why is this important? This is important because the inducement you are trading away from gives you clarity on your directional bias. It helps you know if you are buying or if you are selling. It also helps you to prevent false break of structures. Are we together? I'll just use this GU that is here as an example. For example, the most important thing in this GU buy trade, which we took last week on the Telegram, is not this break of structure, right, that happened here, then grab of liquidity that happened here, right, and then return to other block and then they move. It's not. That's not. Every region in the, a lot of people now trade they now trade patterns, and then they think they are trading smart money concepts. So look at this, for example. People are now so carried away by MSU pattern. MSU pattern is not the key to trading. If you don't know the inducement you are trading away from, that your MSU pattern will be liquidity grab. That your MSU pattern will just be an inducement. So my question to you is, was this not looking like, okay, this is an MSU pattern, right? You can consider this from here, right? From this, I don't know if you can see my code. So that's an MSU pattern, but price still sold. To tell you that what is most important is not the MSU pattern. What is most important in this case wasn't this MSU pattern. My MSU means manipulation setup. What was most important is actually this particular inducement that you are trading away from. Do you know why? Because from the inducement, you have been able to now identify that, okay, price has taken this low. Price grabbed liquidity to the downside, right? Price took the low. The inducement I'm trading away from is this low. So therefore, because price has taken inducement to the downside, my break of structure to the upside will be valid, return to other block will be valid, and the move will be valid. Every other thing here will be invalid if you don't know this. Every other thing will be invalid if you don't know this. So the most important thing when it comes to trading smart money concepts is to correctly identify the inducement you are trading away from. In short, is to make that the first. I tell my students, when you open the chart, the first thing you are looking out for, I tell them, ask yourself this one question: what is the inducement I'm trading away from? Remember I said that inducement I'm trading away from is what I call it, but smart money concept calls it liquidity grab. Where is my liquidity grab? It gives you the sense of direction, right? Because price will take a low to go high, and price will take a high to go low. Look at this for another example, right? Look at this. Price took this inducement, price grab this liquidity towards the downside, price took this liquidity towards the downside, and then price can now, because it has taken a low, because it has taken a low here, price can correctly go high. Smart money concept is not MSU pattern. No, it's not. Smart money concept is first being able to identify the inducement that you are trading away from, the liquidity grab. Once you've identified that clearly, every other thing like the break of structure and return to other block will make sense. If you don't identify it, every other thing you are doing is pattern trading, and you will be taken out. So in subsequent videos, I will be showing you some examples of how identifying the liquidity grab first, which is the inducement you are trading away from first, will help you in now having clear sense of direction and knowing if your smart money concept ideas is a buy or sell. You see this particular move, I have seen a lot of big traders who make this same mistake. Even recently, I saw something like this, right? Something similar to this, and somebody was expecting a buy, another person was expecting a sell. All I needed to do was to identify the liquidity grab, and I could tell where the direction was. So it is very important for you to first identify what the liquidity grab is, and what is the inducement you are trading away from, and that will now help you to know if your smart money concept idea is what is right or wrong. So in the next video, I'll be giving you examples and show you the right way to trade smart money concepts. See you in the next video.